Hey everyone, welcome back to my channel. Thank you for watching. I hope that you are doing well. And today I'm going to talk about 3 strategies that you can follow in a bear market. Now, just very quick, if this is the first time that you are here on my channel, welcome. I hope that you learned something. I will try to keep the video as short as possible. People have been telling me that my videos are too long, so I'm going to see if I can fly through this. All right, first up, what is a bear market? Now, it's important to understand that a bear market needs to be confirmed on a chart, and usually it is defined or confirmed as a bear market once a market drops 20% from its latest peak. If it's been declining ever since that peak, if there's a 20% drop in price from the highest peak up to where the price currently is, that is generally when we confirm a bear market. All right, now let's look at the different strategies that you can follow in a bear market. I'm also classifying these from the most active and involved and the most risky moves in a bear market. And I'm also going down. There are 3, so they're going from the most risky to the least risky, and the most active to the most passive ways of dealing with a bear market. Now, the first strategy in a bear market would be market neutral. Okay, a market neutral strategy, which is also your short selling. Now, basically, what this entails is it means that the trader, and I'm calling it a trader, not investor, because this is something more that traders would do. It's very high risk. You need to know exactly what you are doing.
2,000 years later.
The trader would actively short the market. So he would buy a put option. He would basically bet that the market would go down in price. So his profit will come from, selling that, short selling that specific stock or that specific, or the whole market, like the VTI or VOO or whatever the case may be. And as the price moves down, he would, be making profit. Now, the drawdowns with this is there are usually very high overnight fees, even on eToro, the platform that I like to use. By the way, if you want to try out investing, if you want to copy my portfolio on eToro and just mimic the trades that I do, you can find my sign up link in the description below. But yeah, so basically there are very high fees, overnight and weekend fees if you short sell a market. So that's the first drawdown. The other thing is, if you look at historically, especially if you're dealing with the S&P 500 or, the American market, single stocks might look different, but for the market in general, the way the market is designed, is to perform over time, so it contains, let's say, for instance, the top 500 companies. So, it will always be the top 500 companies. So it's kind of designed to grow over time. That's its sole purpose. So to go against that wave is very risky. Now, the only way that you can do it safely is by putting very, very tight stop losses. Now, what this means is when, if you are short selling the market and it does turn around and it turns around quite, with a lot of momentum, that you can exit that position safely and timelessly, without causing massive losses to your gains. Like I said, this is a very risky thing, and it's also called the market neutral, meaning you don't get rid of your buy positions, you just open additional sell positions, and that basically hedges the portfolio. So as it moves down, your buy positions lose value, and your put positions would then make some gains, which causes your portfolio to just balance out. I hope that makes sense. All right, let's look at the next strategy. The next strategy in a bear market would be to dollar cost average. Okay, now this is my personal favorite, and my portfolio on eToro has been designed for exactly this purpose. Now, dollar cost averaging just basically means buying in, consistently over time. It means that you are putting in money either weekly or monthly into all, or into one specific market, or in the case, if you are copying the RT Investing copy portfolio, my portfolio on eToro, you would be basically buying into, all of the different markets and asset classes and everything that we are invested into, either weekly or monthly, and in effect get your buy-in price as low as possible. I have a picture here that I've opened, that I've received. So this is basically, what your price action would look like. If you keep on buying, now you can see the dots are very small here, but if you keep on, monthly or weekly depositing, you'd see that your overall buying price would look something like this, especially if, you deposit consistently, on a regular basis. So here you have some, deposits when the markets were very, low, and then it went up. So slowly your average buying price, would not be this here or even that there, but more towards here, because the ones here at the bottom would cancel out the ones there, leaving you somewhere in the middle. So you would always, grow consistently, or your buying price would go with the market, and these massive ups or downs, wouldn't matter as much. And it's just a perfect opportunity. It's just it's a better alternative than trying to time the market. It's a better alternative to trying to always find the dips, because it's nearly impossible. Like I would disagree if anybody say that they can time the market perfectly. Nobody can. And if there are people who think they can, then very well done for you. I don't think it's possible. So for you to always time the market perfectly, is just such a, if that's the kind of thing that you're into, then again, good for you. But for me, it would stress me out a lot, and I would rather just stick to my strategy and keep on buying in either weekly or monthly, and then, just get that overall, or just that, just get my buying price as low as possible for the time going forward. All right, let's look at the last strategy that you can follow in a bear market, and this would be, exactly, do nothing. All right, so sometimes the best thing that you can do is just to do nothing. All right, so if you look historically at the graphs, okay, I'm going to look at a few graphs here for you. If you look historically at the graphs, you can see that, look at this. This is now on Yahoo Finance. If I were to sell, okay, so this was the big COVID drop in 2020 March. So if I were to sell here, let's say I got a fright when I was in the market right around here at 150. If I were to sell, and then waited or whatever the case may be, I would have, if I just did nothing, then look at this. Less than a year later, my money would have been exactly where it was, before the pandemic started. And I would have lost out or missed out on all of these gains from the time where I sold, up to there. So sometimes, as I said, in a healthy market, the way the American markets, the stock market is designed, it's designed to make money over time. It's designed for people to build wealth. So, it's very risky to, one, bet against the market, or two, trying to time it. So sometimes the best, if you cannot dollar cost average, the most passive thing for you to do is just to do nothing and just, ride the wave, let it go through. Don't panic, stay calm, and, you will get ahead in the end. It's just going to take some time. All right. Now, just before I end this video, I just want to show you guys some quick encouragement. Now, if you look at the S&P 500, the past few days, you can see now it's the 26th of January 2022. You can see that there's been a lot of blood in the market. But in perspective, guys, look at this. This is where we are. This is what we have, the drop that we've had. In the last 5 years, we are still up 89%. In the last year, even with this recent drop, we are only down 13.17%. Or not down, up. We are still up 13.17%, sorry. But look at this. Year to date, we are down 9%. So you can see that, we are not near the classification of a bear market yet. We have to drop another 10% before, even before these strategies can even, kick into place. So I hope this video helps, guys. I hope that it encourages you, to stay calm and, just to have some general perspective. If it did help you, please give this video a like, and also please consider subscribing to my channel. It will help me out a lot. And then also, if you want to copy my portfolio on eToro, then you can also find the sign up link to eToro below. And also feel free to watch some of my other videos on the channel where I have covered the breakdown of my portfolio to also discuss, where I also discussed, how, what we are invested into and how we are hedged and how we are diversified, and also, what exactly we are invested into. All right, guys, I'll catch you guys in the next video. Thank you. Bye-bye.